Right then, hello and welcome back to another video. So in this video I'm going to be running through my best and my worst trades of 2024. I think both will be useful. I think the worst trades would probably be, certainly for me, I found that more useful, just going through and finding mistakes that I've made and how I can improve on it in the future. I'm going to start with my best to make myself feel a bit better, and then we're going to go through worst. If you've missed it, I've just finished filming. I think I'm going to put it out first, so it should be on the channel. I've just done my December update and with it my year update. So if you want to know how I've done for the year and what happened in December, then please feel free to go and check that out. But we were up 14.68% for the year. Yeah, I'm not going to talk about that here. If you want to know more, go and watch that video. So my first best trade of the year was Nvidia, which I'm sure is a lot of people's best trade or one of their best trades this year. But even within here, there are some mistakes. So I didn't catch it right from the beginning. It started all the way down here years ago. I was not, 2022 is when 2023. So I was doing this strategy then. It might not have passed my checklist then because it has certainly been an improver over the past couple of years. But here, it was definitely on my radar. It was putting in this long base and I was just waiting for the breakout, textbook breakout. If we punch in slightly, big volume spike here out of this very long base. I entered on the day it broke. Nothing wrong with that at all. Really, really good entry. And we were off to the races. The mistake was a hindsight mistake. I don't know why, I can't remember why, because this was right at the start of the year. I did not enter with a very large position size. I'm not sure why, but I didn't. And that's a big regret. If I'd entered with a full position size, this would have made a much bigger difference to the portfolio. I don't know if maybe it didn't pass my checklist at the time. I imagine it would have done that long, only a year ago, but it might not have done. But for whatever reason, I didn't enter with a full position. I entered with just not even quite a half position. So that's frustrating in hindsight. But it went really well. It started running up. It kind of put in another mini base here. We put our trend line in. Because I was frustrated that I didn't have a full position, I wanted to add to the position. So when it broke through here, I topped up to a full position at this point, but obviously we'd already had a very large 100% gain to this point. And then it carried on showing a lot of strength. If I cut this off, all of that we don't need. It carried on showing a lot of strength, going straight up. And then, I'm not going to say this is a mistake, because I don't think it is. I'm quite happy with this. But there was this big engulfing candle. So I watch a lot of videos from very successful traders and read books and things, and a lot of them say when you've got a big engulfing candle like this, so a big red candle that starts above and finishes below the previous day's candle, that's a very bearish sign. So the next day I woke up and saw that it was a full engulfing candle. We'd been on this huge run, so I decided to sell my entire position to lock in some profits. So for the total position, because I didn't start with a full position, well, I guess that doesn't make a difference to the percentage, but because I added here, it kind of meant the average buy was here rather than down here. It was a 71% profit, and the total gain from my initial entry to sale was 145% profit. So yeah, very happy with the trade. I just wish I'd entered with a full position. And since selling, it was the right decision. It came all the way back down to the 150, which was from when I sold, was another 28% pullback. And I would have been very miffed at that. I would have been very disappointed if I hadn't sold. It's since kind of been coming back up and showing strength. And if I could have held the position, I'd still be in it, but it's only 12% higher than when I sold. And we've allowed it to go sideways for a while. I've got a new resistance line in here, and if it breaks through here, I will re-enter with a new trade. So I think the actual sale was good. So yeah, obviously I'm talking quite negatively about this, but I'm very happy with this trade. I think the entry was really, really good, and I think my top up was really strong as well. Both entries I think were really solid, and I think the sale was solid as well. So all in all, I'm very happy with that trade. Next one, Palantir. This is another one which I mentioned in the video that I've just filmed. Another one where I didn't enter with a full size position though. So that's something I'm determined to correct this year, 2025. When I've been not so confident, if I just had a run of kind of failed trades, losing trades or something, I tend to lose my confidence, and sometimes just won't take a trade at all if it's even if it's broken out and it's looking strong. Sometimes I just won't have the confidence to take it, and other times I will enter, I've been entering but with a lower position size, and that has led to some really good trades, but I'm not getting the returns that I could have been getting. So I'm determined this year just to stick to a full size position, I think, for most of the year, unless we go into a true bear market, and then maybe I'll adjust. But yeah, another entry here, a really good entry. We're in this sideways action. It broke through here. There's a lot of volume coming in after earnings. I entered here, went sideways a bit, and continued upwards. It was for a short-term trade because it had already been in a very long uptrend. So we were targeting 10 and 20% profit targets. I think it was more like 15% when I took my first profits, because it gapped up here and carried on running. And then I took more profits around 20% when it was going in this sideways section here. And we maintained a third of the position to sell once we broke down through the 50-day moving average. On the next set of earnings, it gapped up again, showing really good strength through this small base that it had put in. So I decided to open a new position again. And then again with a short-term profit target in mind. So we took our 10%, we took our 20%. And then my rule being, so we had a third from this position left and a third from the initial position left. And the idea being that I have two rules, but one rule basically, but there's different components to it. So the final third we sell at the break of the 50-day moving average, which is this line here, or the break of a very defined trend line. And I considered this here, you can see my blue line, I'll make it thicker. There we go, it's nice and thick. I considered this very much a defined trend line. So on this day when we broke down through it, I decided to sell the remainder of my position. We will see if that continues higher. It was a mistake, but I was sticking to my rules, so I'm happy with that. And that in total, combined between the two, taking partial profits along the way, was a 49% profit from this trade and a 21% profit from this one. So combined for the portfolio, quite a good move. And I'm just happy with my position sizing I want to work on, but my actual entries and my sales, I'm very happy with on this trade. I think that went really well. Obviously, it was quite difficult to go wrong trading Palantir and Nvidia this year, but very happy with it nonetheless. My third one has been a very recent one. I only bought it in December. So this is Raspberry Pi, a UK tech company. It only IPO'd this year. It's been in a steady downtrend since IPO, and then broke through its trend line. I didn't enter on this, the break of the trend line, because there was no volume, you can see down here. But then when it broke through, the first time it broke through a previous high, after breaking the trend line, there was a huge volume spike. So I entered here on the break of that and on this volume. And you can see, if I get it down so you can see a bit clearly, there's a huge, massive volume here, which to me speaks to institutions starting to buy up the stock, which is exactly what we want to see. And I think that's why this stock has gone on such a run. And the reason this has made it into my best trades, even though it was very recent, is just because this move, it's up 50 odd percent already. 56% already in less than a month. And this is not a stock that was on Twitter at all. It's not a stock I heard anyone discussing. It's one I'm quite proud of, because I found it through my checklist system. I didn't really know about the company beforehand. It just came up on my checklist. I put it onto my watch list. We bought on the break, and it's done incredibly well for us. So it's not like Palantir and Nvidia where the whole world knew about it. This is one that I found just through my checklist system and has been a huge success. Now I'm hoping, so this is for a long-term trend, a long-term hold. I'm hoping that this will go on to be a multi-bagger. If not, then it doesn't. That's fine. But it's a recent IPO. It's got institutional buying in it. The actual company is growing its numbers kind of steadily and at a good rate of knots. And I don't think there's really any reason that it wouldn't. Obviously, it's going to take breathers. There's going to be pullbacks, but I can see this over the next couple of years going on a pretty decent run. So very happy with this one. Very happy with the entry, and very happy with the screening process to find the stock in the first place. And then just a mention, it's not actually a trade from this year because I didn't buy it this year, but Meta, which I bought all the way back in 2022, back in my value investing days actually, where I'd buy on a downtrend, which was a bit silly. But I've been holding it all this time, and if I put it onto a year, I made a partial sale here when it broke the 50-day and locked in some profits. I held through it breaking the 150-day, more just from attachment, to be honest. But also, it's a stock I've been following very closely, and all of their previous earnings reports were so strong, and the messaging coming out of them was so strong. I couldn't see these earnings being bad, so I decided that I was going to hold because I thought this was just temporary weakness. It turned out to be the right choice. It could have obviously gone wrong if it had dropped down, but it's carried on higher. And yeah, if I put it on a year, so it's up 70 odd % for the year, which has been very nice for the portfolio, and it is the largest position in my portfolio. So, and it's still showing strength. It's not showing as explosive strength as it was showing back a year or two ago, but it's still in a steady uptrend. Right, now, that has been the what I would consider the best trades of the year. Now to get on to the worst trades. Now I'm happy to say the worst trade in terms of percentage has been Wise, and this was a 20% loss, which I'm not happy with at all. I shouldn't be having 20% losses at all, ever, for any reason. I have got the partial excuse that it was because it gapped down. So on this day here, it gapped down 11.5%. So that took my 10% down to 20%. And I was away on holiday. But there's a few things to take from this. I should have, which I have done since, but I should have had an automatic stop loss on there so that when it gapped down I was out. I actually sold a couple of days later, still for a similar price, but I probably could have got out a bit sooner. But also, so I bought here and I bought here. I should have sold on this initial gap down. That was such a sign of weakness. It's very unlikely when a stock gaps down 10% in one day like that it's then going to go on to immediately go into an uptrend. So the lesson I take from this is, if a stock gaps down to that degree, I should just get out. And I would have got out, well, for like a 2-3% loss, it looks like. Not much of a loss at all. Instead, I held. It went below the 150 day. Again, I should have been out below the 150 day. Started showing strength and then gapped down again to put in a huge loss. And then I had to kind of bite the bullet and take a 20% loss here before it got any worse. So that's, not a great trade at all. Just not very disciplined. And I don't think I had my rules and stop losses in place well enough at this stage. When was this? This is a buy right at the start of the year. My first buy was back in 2023. So since this, I'd like to think that this couldn't happen in 2025, as long as I stick to my rules and the templates that I've set up for myself. But that's why it's so useful to look back and go through these kind of things. It's trades like this that have gone wrong that have helped me to develop the rules that I've been using for the last few months and I'm going to be using going forwards. So that's the first one. That's the biggest percentage loss of the year. So these ones aren't necessarily in like percentage loss order. There might be one or two that are actually worse percentage losses, not than Wise, but than these. But they're ones where I don't think I did anything wrong. The market just turned and I had a couple gap on me, and just led to like a 15% loss or something that I couldn't avoid. Lamb research though, I think I could have avoided. So this was a 15.8% loss. And I just should have been out sooner on this. So here is let's make this thicker. Here is the line I was using to enter the trade. So this was the resistance line when it was underneath here, going sideways. It broke through, I entered. I would rather have seen the entry on the day it broke through or one of these 2 days, but that's not the mistake. The mistake is waiting so long to get out of the stock. If I take a stop loss from here of 10%, it's all the way up here. And I ended up selling down here at 14%. And then with trading fees and FX and all of that, it turned into more than 14%. So my mistake here, again, it's gap down. So something I'm really going to pay more attention to is gap downs, because I haven't done back testing and looked back through hundreds of charts to check this, but I'm pretty sure if a stock gaps down, unless some amazing news comes out that a couple of days later, it's not going to suddenly turn into an uptrend. So I should have just got out here. And if I had a 10% stop loss, which is my maximum stop loss, it would have made sense to put it under the 50-day moving average here. That should have been my absolute maximum stop loss. And really, with a US where I've got slippage from FX fees and things, it probably would have been better under that's the 21-day moving average, but probably would have been better just under the breakout. But instead, I've let it run. I can't remember where my initial stop was. It probably was here. And I think what happened was it came down on this day. I left it to the next day to see if it would come back. It came back up. It's dropped down again, and I've just been very undisciplined. I should have sold on this day at the very latest. I should have been out sooner. And it's just one of those, I didn't want to accept the loss. So I gave the stock more time, thinking, oh, it's going to bounce back tomorrow. It's going to bounce back the next day. Just a very amateur mistake, really. And it just carried on going down. And I thankfully did get out a few days later. If I'd held on for more time, it would have then gapped down more and I would have been down a huge amount. But this is just a discipline mistake. I really need to eliminate this from my trading. And as I say, I'm very much going to pay attention to gap downs, especially if it's around a stop loss area. If my stop had been, for example, just there and it had gapped down, even though it hasn't touched my stop loss, I think that's probably a sign to sell. So yeah, just a discipline mistake there. And a slightly different mistake on Uber. This was an impulse buy, and I shouldn't be doing this. And it's fairly recent as well. This was in October. So Uber, you can see, so both of these actually did, Wise and Lamb Research did pass my checklist at the time I bought them. Uber did not. Green here means it passes my checklist. Yellow means that it's between 30 and 35 points. So it doesn't pass my checklist, but it's got potential. So I should not have been buying Uber anyway. It didn't pass my checklist. But I got suckered in by a story and made an impulsive buy. So I watched the Tesla, I've forgotten what it's called, but like their investor day, where they show off all their new products. And it's where they showed the robo-taxis. And they had like their mock-up town and people were getting lifts by all these robo-taxis and taxis. And Elon came out and gave a speech about how these were going to be the future and how they were going to be everywhere, and someone could own one and while they're at work have it going off and make them money and all that type of thing. And he mentioned, I don't know if it was actually at the talk or if it was mentioned in the statement or something, but he was talking about how companies such as Uber were going to be huge beneficiaries of this, because it's going to be technology like Uber that would be used to manage them all. Like if you were ordering a robo-taxi, you'd be using something like Uber. And the market felt the same, and it was on this day. Huge volume spike. I had this previous all-time high in. It broke through. And then I thought, well, it's all the way at the top. Let's wait for a pullback to this line. And when it pulls back, I'll buy in for the inevitable run higher. So I didn't pass my checklist. It was quite extended from the 150 day even. And I just full stop shouldn't have been buying because it didn't pass my checklist. But I did because I got suckered in by the story. Bought here and it just fell down and I ended up being stopped out. And again, it's one that was trending lower and then it gapped down. So it gapped through where my stop loss would have been, and I ended up losing 13.9% on this one. So again, not a disaster, but more than my 10% stop loss should have been, and a stock that I shouldn't have been in the first place. If I was more disciplined, this wouldn't have even been on there, and that would have been a however many percent to my total portfolio that would have been added on to my yearly total. And then the next two are not mistakes of action, but mistakes of inaction. So the first one, AppLovin, being on an absolute tear this year. It's up kind of 800% or something ridiculous. It was not on my radar back here. Well, I think if it was, I don't remember paying attention to it back here. But here I was. And so this is a mistake of inaction. I never had a position in this, which is the mistake. I was watching here when it broke through. And it was in this summer period again, I think, where I didn't have much confidence. So this is something I need to work on. I didn't have the confidence to take trades, especially in companies that I didn't really know anything about, and I didn't really know anything about AppLovin at this time. And it broke through, and I was like, oh, I'm not sure, I'm not going to enter there. I'll wait until it passes through this next level, which I've got to zoom so far out to see, which was the all-time high. And then if it's still showing strength, I'll get in when it breaks through the all-time high. It got to the all-time high, it broke through, and I didn't buy it. And then it got a bit higher, and I was like, oh, it's a bit extended now, I'll wait for the pullback. The pullback never came, and it just carried on up, and up, and up, and up. And it's just a mistake of inaction, not having the confidence to pull the trigger. So if I'd entered when I should have done, when I had it all marked out, and I had it planned that I was going to enter at that time, but just never did, it would have been 260% as we sit now. But I didn't. And that would have made a huge difference to the portfolio, which is one of the reasons I said in my last video that I do feel I could have done a lot better this year. That would have been a 260% move on a full-size position, which would have added a reasonable amount of percentage to my yearly total. And it's a frustrating one. It's not a mistake that I've done anything wrong because I wasn't in the stock, but it's a mistake of inactivity where I should have been pulling the trigger. I'd done all the work. It was on my watch list. I'd marked out the chart. All I had to do was pull the trigger, and I didn't. So that's a very frustrating one. Out of all of these, that's actually the most frustrating one. And then the next one is Doximity, which is a very similar situation, but I did have some prior pain from this one. So Doximity, a healthcare company, and they do, it's like LinkedIn, but for physicians, like doctors and things. So I bought all the way back here in 2023. I didn't have my same entry tactics then that I do now, but I was buying at the low points of this channel. It broke down. I carried on buying. Long story short, I got stopped out of this trade and I ended up taking a reasonable loss. And it was very frustrating because all of the news coming out and all of their earnings reports and everything were relatively positive, and it was passing my checklist, and I couldn't understand why it was performing so poorly. and I got stopped out and took a reasonable loss. So that's the prior pain, which kind of helps to make sense for my mistake on this one. But this is another one of failure to act. So I was stopped out here, but it was still on my watch list. It still passed my checklist. I had all this marked out still. It went sideways for a long time, forming a perfect base. It'd been in a downtrend, forms a perfect base, perfectly setting up for a phase 1 to go into a phase 2. And it broke through on earnings, good earnings, broke through with really high volume, textbook. Enter, pull the trigger, get back in. But because of that prior pain, I didn't. So this is just another mistake of inactivity. And again, if I'd got in, even if I got in at the high of the day, I would have been up 55% now. Not even broken the 50-day. So it would have been a really nice solid trade. And again, that would have improved my yearly results. So it's not just the actions that I took that mistakes, but it's also actions that I don't take I'm counting as mistakes, because I'm doing the work to find these stocks. I need to make sure that I'm pulling the trigger. So that's something I'm really, really going to work on in 2025 this year, is just to make sure that I pull the trigger. Worst case scenario, I pull the trigger, it doesn't work, I have a stop loss set at less than 10% and I lose less than 10%. That's fine. That's part of the plan. The plan is that I'm going to lose 50, 60% of my trades. That's the plan. That's accepted. So I don't know, I shouldn't be scared of it happening. But anyway, those are my best and worst trades of 2024. For those watching, I hope you got something from that, even if it was just to have a little laugh at my my poor trading. But I don't think there's enough people putting out their poor trades, their mistakes, out there on YouTube and X and that type of thing. So I wanted to put some in there. I look constantly at my mistakes and try and go back through old trades to see what I can improve. And I think it's an essential part of improving as a trader. Trying to work out how to prevent mistakes you've made from happening again, or at least minimize them. You're never going to eliminate them entirely. And also looking back at winning trades and seeing what you could have done better to have made an even better trade. Like in video entering with a full size position, Palantir, the argument could be made that I should have just held for the long-term trade. But I think you're always going to have occasional situations like that each year where you could have held for longer. So I don't think that was a mistake. But what I'm taking from NVIDIA and Palantir is full initial entry sizes. Don't get timid, don't get scared. Just stick to the strategy, pull the trigger with your full size position. Anyway, I hope that was useful to some people. If any of you have your best or worst trades you would be willing to share, please do, because I love to hear about people's experiences in trading. Yeah, please hit the like button if you've enjoyed it, and consider subscribing. And I will see you in the next video. Have a great day.